Over the past 2.5 years, the U.S. economy has been gradually recovering from a deep recession. While conditions have certainly improved over this period, the pace of the recovery has been frustratingly slow, particularly from the perspective of the millions of workers who remain unemployed or underemployed. Moreover, this sluggish expansion has left the economy vulnerable to shocks. Indeed, last year, supply chain disruptions stemming from the earthquake in Japan, a surge in the prices of oil and other commodities, and spillovers from the European debt crisis risk derailing the recovery. Fortunately, over the past few months, indicators of spending, production, and job market activity have shown some signs of improvement, and in economic projections just released, the Federal Open Market Committee participants indicated that they expected somewhat stronger growth this year than in 2011. The outlook remains uncertain, however, and close monitoring of economic developments will remain necessary. As is often the case, the ability and willingness of households to spend will be an important determinant of the pace at which the economy expands in coming quarters. Although real consumer spending rose moderately last quarter, households continue to face significant headwinds. Notably, real household income and wealth stagnated in 2011, and access to credit remained tight for many potential borrowers. Consumer sentiment has improved from the summer's depressed levels, but remains at levels that are still quite low by historical standards. Household spending will depend in turn heavily on developments in the labor market. Overall, the job situation does appear to have improved modestly over the past year. Private payroll employment increased by about 160,000 jobs per month in 2011. The unemployment rate fell by about 1 percentage point, and new claims for unemployment insurance declined somewhat. Nevertheless, as shown by indicators like the rate of unemployment and the ratio of employment to population, we still have a long way to go before the labor market can be said to be operating normally.